So more so for people that are looking for their families, there's a huge impact on schools. Do you think people are weighing up a cost point and just saying this is how much it's going to cost me to send my children to private school and this is what I will save if I live in this catchment area?
Yeah, I think it really, again, probably depends on your attitude towards education and your how well you could afford independent schooling. So again, to use that Hills area as an example, where Cherrybrook Tech had a lower price point. The thing about that broad area is that more families send their kids to independent schools. So maybe buying into the catchment isn't as pressing a consideration because they were always going to send their kids to an independent school where you don't necessarily have to live in the catchment. And that's how I think different values around education can influence the market dynamic. Having said that, I mean, with cost of living pressures as they are, depending on the number of children you have, I've no doubt a lot of families would be trying to do what they can to get into those markets. You know, there have even been cases, unfortunately, of fraud where people have registered at an address, at a rental property, and it turns out that a single school sees multiple families registered at the same address.
Oh, no.
That's how desperate people are. And I think when I approach this research, I'm always thinking about it in terms of the societal, political context as well. That says to me that we probably need some, more reform in our public school system so that people don't have to go to those measures to get a decent education for their kids.
Yeah, that's a really interesting point. I know that's happening. It's rife where we live, and it's out of desperation, really, isn't it, to say, well, okay, I live in this zone. I don't want my kid to go to this public school. I want them to go to the one over there where their friends are going. So this is what I'm going to do to beat the system, essentially. But fundamentally, I would say, and I'm on a board of an independent school, so I get to see a bit of the data, and fundamentally there's a lack of schools anywhere in the country, wherever we look in major capitals, like they're all bursting at the seams, and there's always wait lists on good schools. There's no doubt about that. But I think the interesting, Rach, you mentioned about, okay, I live outside a good school catchment zone and send my child to a independent school or a private school versus saying I live in the school catchment zone that I want and take advantage of the free education system. Are we looking for the price on the way in, or are we looking for the growth long term? So it really depends on which lens we're looking through.
Yeah, I would agree. What I can assume is behind a lot of that weaker capital growth trend is a bit of an affordability limit, and maybe that is slowing the ability of families to actually buy into these areas even if they want to.
I grew up in an environment where there was one primary school. The private school was 3 hours away. No one ever went to that. And the high school, we had two options and they were both half an hour away. So it was pretty clear cut for me being in regional. And I think people in the regions or in country areas listening to this are saying, well, it's really just we send our kids to the local school and that's pretty much it. But there's I find locally there's been a lot of a shift towards maybe the independent or Catholic system because the public system isn't giving them what they need. So with in respect to, I suppose, again, the weighting on schools, let's strip back a bit and say, well, okay, fundamentally low supply, high demand in majority of the good areas around the country. Is that fair to say? Every capital city, every larger regional at the moment, there's massive demand for living there because there just aren't enough houses.
Sorry, are we still talking about the school zones or just the market more generally?
Just coming back to say market more generally. The fundamentals is that's what we're seeing right now.
Yeah, so we're in a really interesting environment for 2025. I don't know if you recall at the end of last year, national home values had a slight dip. It was a peak to trough decline of a whopping 0.3%, right? We were just starting to see this combination of factors, relatively high interest rates, cost of living pressures, affordability constraints weighing on the property market. That seems to have really turned a corner in 2025, partly because household finances are improving. You've got lower interest rates, stronger real income growth, and consumer sentiment had a massive boost through August, rising almost 6% off the back of the rate cut decision. And this combination means that there's more money in the household sector, there's more positive sentiment around it being a good time to buy a dwelling, but that has all happened against sellers holding off a little bit. Like you were saying before, John, broadly supply is constrained. And I think that's because between things like Liberation Day, geopolitical tensions, there was a lot of uncertainty through the first few months of the year. And so supply levels are low to where they've been historically. In the past 4 weeks, new listings, even though they're starting to trend up, as we head into spring, they're still about 10% below their historic 5-year average. Total listings are even lower. They're roughly 20% below the historic average. So I think in the short term, we can look forward to a pretty good spring selling season for sellers. And we might see a few more listings campaigns pick up off the back of that. And like you say, this is a pretty broad-based increase that we're seeing in the market.
Yeah. Eliza, am I able to ask a question that's not related to school housing at all, just because it's such a hot topic this week? There was a report that came out that said the Labor government is predicting the First Home Guarantee Scheme to only have a 0.5% impact on housing prices. And I thought that was wild, and I can't miss the opportunity to ask your opinion on that.
I feel like it would have more of an impact. I think it depends on what time frame we're looking at as well. So I think in the short term, there's going to be a lot of activity and excitement around this scheme. And I'm with you. I can't help but think that the impact on prices would be a little bit more than that. But longer term, I think maybe when people who could really afford to take advantage of the scheme have done so, and that kind of peters out, we might see prices kind of stabilise off the back of that. But yeah, it's a surprisingly low figure, isn't it? And maybe it is the impact of, lots of people can qualify for the scheme, but they still have to qualify for the loan.
That's right.
Yeah, and we've spoken about this on other episodes, but the qualifying for the loan bit is relative, but sometimes the banks are lending people more than what they think they can actually afford as well. And I think the thing that they need to be careful with is what are the repayments like for the next 5 years, not the next 5 minutes sort of thing. So yeah, it's when everyone's rushing to the finish line here and there's FOMO and emotion, some people will be caught out, won't they?
Yeah, I mean, to be fair, I think broadly speaking, we have a pretty good, and when I say good, we have a pretty conservative lending environment. So people do have to go through stress tests and, a serviceability buffer of 3 percentage points, which does help to generally protect the lending market. It's why arrears rates in Australia are generally very low. Yeah. Having said that, I really hope a lot of young people who are looking at these schemes understand that the flip side of a 5% deposit is a 95% loan to valuation ratio, and that means potentially hundreds of thousands of dollars more in interest over the life of the loan. Now, funnily enough, that can still work. If you're a renter in Sydney, for example, where median rents are $800 a week, the time saved in the rental market plus the LMI savings probably outweigh the additional cost of the interest on the loan. At an individual level, it can be a very smart scheme to take advantage of. It can work. The problem is at a systematic level, it really does nothing to address why deposits are so high in the first place. And I think that's a pretty common critique of that at the end of the day, when you really break it down, this is just another demand side policy to push prices higher.
Yeah. When do you think this will end, Eliza? So there's no end date in sight for that. It starts October 1. Do you think there's an end date in mind from the government?
I think it depends on the impact that the scheme has, but I think, there could be a time where they start to pare it back a little bit in some form, in whether it's the places or the income caps. It could even just depend on, the political environment as well. But
interesting.
I think we'll just have to see how the scheme plays out in the short term.
Yeah, I saw a report this morning that someone was having a dig at the scheme, saying that the children of billionaires would be able to take advantage of the scheme because of the lack of income caps. But in my experience, the children of billionaires aren't borrowing 95% for a home loan.
They're not waiting around for October 1.
And they're not looking at where there is a limit, where there is a level of selection here is the thresholds of the price cap. So it's 1.5 in Sydney, and that sounds like a lot, but 1.5 is the median house value, right? So you're not going to be buying a house in Mossman, eastern suburbs with this scheme.
Yeah. No, fair call.